Saw an interesting bit of news on a company or a couple companies. One company we monitor and one we interviewed in person recently. Interviewed them at the Roth conference just coming out of COVID. The news involved a leak on a potential deal between TSX listed Park Lawn Corporation PLC on the TSX, a New York Stock Exchange listed Carriage Services Inc. CSV on the New York Stock Exchange. Now, both companies provide funeral and cemetery services and merchandise. Carriage is in the United States and Park Lawn is in Canada and the US. Now, the news here was in late June, Park Lawn has just now confirmed a rumor of a preliminary non-binding offer to acquire Carriage. Carriage had recently announced a strategic review process, so it's not unexpected that somebody would be looking to take them over. Carriage's shares rose from the $27 range as the news was leaked to the $34 range as this was confirmed. The source of the leak, however, has not been confirmed to our knowledge. The details on the non-binding bid as per the leaked bid letter, it was an all-cash offer, $34 per share, which was about a 25% premium to at the time of the letter when it was issued. The letter actually came out on June 13, and the leaks happened after that. The bid letter indicates that Park Lawn has a private equity partner to help finance the offer. Now, that private equity was disclosed as Brookfield Asset Management. No details are available regarding the financing structure, but Park Lawn noted that no public equity financing would be required. The bid letter points to a good strategic fit between the two entities, notably complementary footprint. There's low regional overlap between their U.S. businesses and meaningful synergies. They talked about synergy opportunities in the letter, but there's no details in that regard. Now, often these deals take months to come together, so one might expect that talks right now would still be at a very early stage with less due diligence really executed. However, as Carriage is a public company with publicly reported financials, deals can come together between two public companies a little bit faster because you can look at years and years of financial statements as opposed to a private entity where you're going to have to request those and look at them with a little more scrutiny. Now, it's interesting that both death care companies have been experiencing weaker results in recent quarters, trying to find a new normal post-COVID. Death rates were higher during the pandemic, and they are facing tough comparable periods near term. You can look at Carriage's Q1 results. Revenues decreased 2.5% to $95.5 million. EPS declined 43% to 57 cents per share from $1 in Q1 of 2022. Now, while Carriage's stock has surged on the takeover speculation, it is still down 13% over the past year and 48% from its 2022 highs. The stock trades right now on a valuation basis about 15 times its expected EPS for this year. Given the lack of current growth, it is likely more than fairly valued near term. Now, there is some potential for some back and forth here between the two companies, and the ultimate price may be higher than $34. We do not see significant upside unless another death care company really wants the asset and is prepared to kind of reach higher than the price that's being offered right now. It could be an opportune bid by Park Lawn, but I am certain the company is not pleased with the leak that came out here today in the last couple of weeks. So an interesting bid and leak here on a company. Again, one that we've monitored. We've interviewed Park Lawn in the past as well, but we've also interviewed Carriage in person.
So if they find out who, like, this is just a question, if they find out who leaked it, I mean, that person will probably be penalized or some kind of action will be taken against them, or not really. Like, have you seen this?
Yeah, I mean, I haven't seen any penalties issues. I mean, there's little teeth in the public markets. I mean, somebody could be dismissed, right? Like you would think if somebody forwarded
if it's an employee of one of the companies,
then perhaps there could be some securities investigation or something like that.
A legal criminal issue, I wouldn't.
No, likely not. But I mean, if somebody tried to profit on it, right? Like, then you could have, like, if it was insider trading based on this information, then you could have.
So if somebody owned the shares, leaked it, then sold into the increase in the price, then that would be illegal, certainly.
Yeah. So it's also, when you have a deal like this, you want to be negotiating, without that coming out.
This is a huge deal for Park Lawn, because Carriage actually, I think, has slightly larger revenues. Park Lawn's revenues, I think, were in the range of what, like 350 million last year. Carriage is just slightly above that. So this is a massive transaction. So one of the things I remember, when we had the interview with the management of Carriage, we spoke to them a little bit about Park Lawn, because Park Lawn is a company we've been covering up here for a while. One of the differences that I noted was that the growth of Carriage was much lower, and also the debt leverage of Carriage, I remember, was certainly on the high end. So you had mentioned 15 times earnings, but when you factor in debt, I mean, if you're going to do an EV to EBITDA, that's going to be, for me, when a company makes a massive transaction like this, there's a lot of risk, right? Like, I'm not going to look at this and run out and buy Park Lawn. That's for sure, right? It's a company. I mean, it has a great track record over time, weaker in the last, year or two. But with a transaction this size, I'd want to see the smoke clear. I'd want to see the details. How much debt are we looking at? Because this could be something that really makes or breaks a company, probably in a lot of cases more likely to break it, depending on what the deal actually looks like at the end.
Yeah, you'd have to see the financing terms and everything like that. Like, capital is far more expensive right now.
But imagine, I mean, for Carriage to want to sell, they would need to be getting a decent premium.
Yep. Yeah, is 25 enough to where it was trading, and we'll see what happens going forward. I thought it was interesting because, again, we've sat down with management team in person in terms of Carriage and talked on the phone in the past with Park Lawn, and you don't often, I mean, you think there is leaks. You don't often see a company come out and say like, "Oh, this was leaked. It got out. We're now going to announce this," because it does still look like it's preliminary in terms of the deal right now. Usually, the announcement comes out when the deal is, is agreed to by both parties. I mean, there are times when a management team will put out an offer if the other side is not amenable, and more if it's a hostile bid and they're trying to get shareholder support. That doesn't look like it's the case here. It just was a leaked deal.